please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Power Breakfast. We are in the Mumbai News Centre. I'm Nigel D'Souza, and with me is Ekta Batra. Good morning, Ekta. Overnight, bond yields spiked up 3% for the first time in the last 3-4 years. U.S. markets, I remember at around 9:30 p.m. our time. In fact, they were trading with a gain of around 100 points, ended down more than 400 points. And that deal you are tracking very, very closely. Fortis.
Well, yes, along with the Dow, I think I'm tracking what's happening with the exchange notices when it comes to Fortis. But yes, there's a lot of developments which have taken place there. We have the Manipal deal, which is now binding. I mean, there's a revised offer, which was always binding in nature, but another one which is coming from Manipal and TPG. But separately, KKR Radiant with a partially binding offer, which we will be discussing over the course of the next 1 hour. But like you mentioned, I think the US markets deserve. Back home on the Lal Street, the markets ended with modest gains. The Nifty gained 30 points, while the Sensex closed 166 points in the green. Reliance, HDFC and ICICI Bank really led from the front. But how is trade set up today? Sonia joins in to tell us what are the market cues we need to watch out for.
Hi, Ekta. Good morning. Thanks a lot for that. Well, you know, the markets, the global markets have been under pressure because of the kind of surge that we've seen in US bond yields. Yesterday, the US bond yields hit that psychological 3% mark. This is the highest that we've seen since the year 2014. And that really has put pressure on the US markets. The Dow fell more than 400 odd points. The European markets have been volatile as well. And not just that, crude continues to remain on the boil. Yes, overnight, crude fell a bit from that $75 per barrel mark. That's because Trump has signaled that US and France are close to an agreement on a nuclear deal with Iran. But it still continues to hover around that area, which makes investors quite nervous. In this era of higher inflation and higher rates, there is an expectation that the Fed may be a bit more aggressive in terms of tightening of rates than it was before, and that's the reason bonds could be a bit more of an attractive investment compared to equities. At least that's what a lot of the experts suggest, and that's the reason the US markets have been under pressure. For our own markets, though, things have been slightly different. Earnings have been much better. A lot of pockets like pockets focused on rural India, CV financing, etc., have done well. In fact, yesterday the Nifty managed to conquer that psychological level of 10,600, which was a positive. It was a 2-month high for the index, and we did see a lot of contribution come in from heavyweights: Reliance Industries, HDFC Bank, ICICI Bank. So private sector banks once again are sort of making their presence felt in the market. We saw buying from domestic institutions as well. DIS bought about 508 odd crores. So keep an eye out on that, though the FIS selling continues. So it's actually subdued global markets, but our own markets have been quite resilient, perhaps because of domestic factors like improved earnings, etc.
All right, Sonia, but what about stocks we are going to be looking out for today?
Well, plenty of stocks to watch, Nigel. So let me run you through them very quickly. Bharti Airtel's numbers came post-market hours. The India business continues to be under pressure because of intense competition. In fact, there was an EBIT loss of almost 500 crores for the India wireless business. Zensar Technologies, the margins declined, so maybe we could see some pressure there. 12.2% margins versus 13.5% earlier. Oberoi Realty, another good set of numbers coming in from the company. Revenue growth of almost 20%, profit growth of 40%. Fortis continues to be in the limelight. They've now received a binding offer from Radiant Life, and Radiant has, sort of put on the table an offer to buy the Mulund Hospital without diligence for 1,200 crores. So keep an eye out on that. Very strong numbers from Raymond, so that stock could be one on the upside. A revenue growth of 11%, profit growth of 62 odd percent. Persistent Systems, the profits were under pressure, down about 20 odd percent. In fact, in Persistent, there was a big fall in margin sequentially as well. So that could be sort of a pressure point for the stock. IDFC Bank saw its profits fall almost 76 odd percent. And there are some important results today. There's Wipro, Ultratech Cement, M&M Financial, Syngene. So a lot of non-index large caps to look forward to today.
Yes, absolutely, Sonia. Thanks very much for that. Well, moving on, the IT department has put out a draft notification proposing relaxation in certain conditions for availing the consensual 10% long-term capital gains tax, listing out scenarios where individuals need not pay securities transaction tax or STT at the time of purchase to avail the concessional tax rate. The Finance Ministry invited stakeholder comments on the draft notification by the 30th of April. CBDT, through draft, acknowledges the fact that STT may not have been paid in many genuine cases, thus proposes a host of transactions that were exempt from payment of STT, but on which the changes proposed will be applicable.
Now, in interim relief for incumbent telecom firms, the Telecom Appellate Tribunal, that's TDSAT, has stayed the enforcement of regulator TRAI's order on reporting requirements and the new definition for asserting significant market power for predatory pricing. TDSAT has also directed for no levy of penalties until further orders. However, in its order, the Appellate Tribunal has allowed TRAI to collect details of segmented discounts or concessions for analysis. Ashmit Kumar, who was tracking that particular hearing, filed this report. Let's listen in.
It's a big relief coming in for incumbent telcos, the TDSAT staying, at least in part, the contentious predatory pricing order. And what we understand is that it has stayed so in parts, giving much needed relief to incumbent telcos. That's Bharti Idea as well as Vodafone. Now, the concern that was raised by the incumbent telcos essentially was, number one, the reporting requirement. It was termed as too tenuous. It was simply untenable, that it's simply unreasonable because the predatory pricing order requires for a reporting mechanism to be done for every individual customer if discounts are given. That was termed as untenable. The second concern expressed by the incumbent telcos is the computation of SMP, that important factors such as switching capacity, such as volume, have been ignored, have been excluded as a part of the definition, which makes the SMP definition or the definition of significant market player skewed. Now, on the back of both these concerns, TDSAT has recorded that these changes are far-reaching. They're likely to have far-reaching implications for the sector, and on the back of that, at least until the matter is finally decided, the TDSAT has decided to stay both the reporting requirement as well as the SMP clause of the predatory pricing order. What the TDSAT has also done is that it has ensured, it has directed TRAI that no penalties can be levied until further orders. An important caveat has also been added, however, that TRAI will be at liberty to seek data with respect to segmented discounts. So that is one caveat given as far as TRAI is concerned. But as far as the road forward, keep in mind that this is only an appellate tribunal. TRAI does have the option of challenging this interim order before the apex court. Will they do so? We'll find out in the days to come. But for now, interim relief coming in for the incumbent telcos. That's Bharti Idea as well as Vodafone. Back to you.
Okay, all right, Ashmit, thanks for that. In fact, we spoke with Rajan Matthew of COAI and the former TRAI chairman, Rahul Khullar. So while Matthews wants this matter to be settled outside the court, Khullar expects more fireworks in the final order.
I think the incumbent operators will heave a sigh of relief on the particular order of the TDSAT. And again, you know, of course, there might be this pressure to move over to the Supreme Court to ask for relief from this particular opinion. But, you know, again, when we talk about ease of doing business, the government has been trying to minimize this whole issue of appellate processes and continuous appeals and try and get quick resolution to these matters. So I think it's in the best interest of the industry and all of the players to try and get this thing resolved in an appropriate manner, other than through judicial proceedings and processes, which are both indefinite and uncertain.
I'm not surprised that what they have done. I suspect that the final order will look at some other dimensions apart from the interim stay, and then you're likely to see more fireworks.
All right, then the race for Fortis heats up ahead of the independent panel meet today. IHH and Radiant, they're back in the race with binding offers, while Manipal TPG also revised their proposal to give an open offer and address the cash crunch. Nisha has been on top of that particular story. She joins in early this morning with further details. Hi, Nisha. Good morning.
Good morning, Nigel. So yes, the race has really hotted up right ahead of the advisory committee meeting. So now there are compelling offers, 4 of them, and Manipal TPG, which remember had earlier signed an agreement with Fortis, comes back with a punch at the last hour. They have given a compelling open offer to the public shareholders. Remember, the public shareholders are going to be very important in the absence of promoters, and they have proposed an open offer to buy out 26% of the hospital business from them, and the open offer price is not going to be less than 121 rupees per share. Also, at the last moment, they have improved the valuation by about 300 crore rupees for the hospital business. They've also looked at addressing the financial crunch, the cash crunch situation at Fortis. So they've offered to buy 5% of SRL from the company, and also arranged for a letter of intent from ICICI Bank worth 750 crore rupees. But that's not all, because remember, IHH, the global player, has also put in its binding bid. But remember that both IHH, TP, as well as Munjal Burman, and also Radiant's latest offer, binding offers, are all partial in terms of binding. They give a very small amount in terms of binding, and a lot is then contingent on due diligence. So let's see how this really pans out, whether or not due diligence time is given by the advisory board, and therefore the board meet tomorrow. The right to match of Manipal TPG is also something to watch out for.
All right, Nisha, thanks very much for that. So that's on Fortis. And Nigel, just want to add that, the revised offer which is coming from Manipal and TPG is actually taken into cognizance a lot of the feedback which the company has probably received over the past 3 weeks. And the most compelling part of it would be the open offer bid, which is with the minimum price of 121 rupees per share. So I think that is something which would be taken into cognizance going forward. And remember, that's the only binding bid that has come in. Plus, they're okay with acquiring an additional 5% stake in SRL Diagnostics. So eventually, post the restructuring, Fortis will still be the majority holder of SRL Diagnostics. The listed company will still have that business, but the liquidity infusion will come in with an additional 5% which is bought into the company. But moving on, we have, after Electro Steels, Monnet Is may be next in the list to be resolved under the insolvency process. Sources indicate that the National Company Law Tribunal will take up Monnet Is case for approval of the final resolution plan. Ritu joins in to tell us what we can expect. Ritu, over to you.
That's right. It's good news for banks. I mean, if this resolution is indeed approved by the NCLT, so Monnet Is case will come up for the final order today, after it was heard yesterday, where Kotak Mahindra Bank also wanted to be part of the resolution process for its claims. So the COC's approval, with Kotak Mahindra Bank also becoming part of this, has gone up to over 99% of the lenders voting in favor of Aon and JSW's proposal. Now, from what we understand, with the current proposal, about 72% haircut is what the lenders will have to take. The offer includes the payment of 2,750 to lenders and an equity infusion of another 1,050 crore rupees. But do remember, there have been talks about, the related party angle playing spoil sport for JSW in this case, because Sajjan Jindal is the brother-in-law of the promoter of Monnet Is. That is something the NCLT obviously finally will have to take a call on. But as far as the lenders are concerned, they did give their vote of confidence to this deal.
All right, Ritu, stay on with us though. Sources say that ArcelorMittal as well is likely to have put in a higher bid for Essar Steel. What are the details there?
Well, yes, Nigel, Arcelor's bid, optically is higher, but that's by no way to say that, they are the winning bidder in this case, because the Essar Steel Committee of Creditors met yesterday, and their meeting lasted a good 7-8 hours, ended very late last night. They've examined and opened both the bids that were submitted in the first round from New Metal and ArcelorMittal, as was directed by the National Company Law Tribunal's order. Yes, ArcelorMittal's bid in the first round was higher, but eligibility of both the players is something that is yet to be established under Section 29A. We understand that banks have sought more documentation support from both Arcelor and New Metal to establish that they're in the clear as far as Section 29A of IBC is concerned. We do understand Arcelor had offered to pay about 60% of the outstanding claims plus other, interest to the lenders, whereas New Metal had offered to pay about 30 to 40%. So in that sense, yes, ArcelorMittal's offers of over 30,000 crore rupees, that is higher, but, the next meeting will really determine the eligibility. Also, if at all, there is a reason to go for rebids, because remember, if they go with the current two bids, it's likely that they face litigation from both JSW and Vedanta.